So even though there may be a transformation office, there may be a chief transformation officer, you need the CFO to step up and bridge that gap, translate that board story, right, from investor perspective into the need for transformation. And that's where I see the role of CFO becoming very important. And they really need to step in and be an active part of transformation, not just delegate it to someone else.
Welcome everyone to Transformation Talk. I'm Tairo Hassan, the director of Brightline at the Project Management Institute. And the topic is why the CFO must become the quarterback of enterprise transformation. And for this talk, we are privileged to welcome Cam Agarwalla. And our conversation really, before I introduce Cam, I need to say that our conversation will focus on three topics on the role of CFOs in driving transformation success. Of course, we'll be looking at how can we rebuild trust in transformation. So in that, when we talk about that, we'll look more specifically on how CFOs rally internal and external audiences to believe in and commit to the next or the ongoing transformation efforts. We'll also talk as a second point how CFOs could be stepping up as the quarterback in transformation. And we know whenever we talk about transformation, there are many stakeholders involved, many executives, from the chief transformation officer to CFO to CIO to the board and the investors. So with all these players involved, why is it that the CFO who must actually play the quarterback role? And then we'll move on as a third point, talking about becoming a transformative leader. And in that context, then what we will be asking ourselves is, what are the skills to move from traditional finance leaders to leading cross-functional transformation? Now, before we move further, let me introduce Cam. And Cam is managing director at Accordion. And he has more than 2 decades of experience in consulting with private equity and Fortune 500 companies. In terms of specific areas of his or expertise, it involves leading complex cross-functional business and digital transformation, growth initiative, EBITDA optimization, global business service setup, intelligent automation. I like actually the qualification intelligent automation, and M&A integration. Prior to Accordion, he's worked with EY in a leadership role. I mean, playing key role in terms of helping organizations building out agile finance practice transformation, building trusted client relationship, developing high performance team, and also integrating capabilities across the practices. Last but not least, he was involved in front office transformations, looking at self-effectiveness, looking at customer experience transformation, and CRM implementation. And I would need to also emphasize that he's a global citizen, meaning having worked in America, in EMEA, APAC. So he comes really with a well-rounded experience, crossing industries from private equity to technology, industrial and customer product, professional services, and financial services and healthcare. Last but not least, let me say that Cam is also a member of the National Association of Corporate Directors. So Cam, I made a long introduction here. Welcome to Transformation Talk.
Thank you very much, Tahiru, for the warm welcome. I really appreciate that. Well, team, I'm really excited to talk about the role of CFO in transformation. It comes from 2 angles here. One is that we all know that there is an increasing need for transformation. We know that companies often talk about not only a transformation in 10 or 20 years, but nowadays needing a transformation continuously. And more and more companies need to establish a muscle around driving transformation on an ongoing basis, right? And we have seen some of the stats that I won't go through in detail, but many of the companies in Fortune 500 have disappeared in the last 20 years or so, right? And basically the lifespan of a company is reducing overall. And that is because of the disruptions that these companies face. So there is a need of transformation that is only increasing with time, right? On the other side, we also know that majority of the transformations fail, or at least fail in delivering the expected outcomes. So what we have is these two opposing forces that more companies need to transform more often, and then at the same time, most of these transformations fail. So the question is, so what, right? What does this imply? And we know that there's a practice around establishing a transformation office to make sure that the transformations do not fail, increase the success rate. Even many companies have taken the step to establish or appoint chief transformation officer roles. But my argument today would be that is a necessary step, but not enough, right? The reason it is not enough is that in my experience over the last 21 years, working with many Fortune 500 as well as private equity firms, what I see is that the investors are getting very skeptical about assigning budgets to transformation. And they are hyper-focused on what is the return on investment. If we spend $100 million in transformation, how does that create enterprise value? And we'll talk about those things. But that angle becomes really important coming from the board and the investors. And many of the leadership think that transformation is the number one risk. If we don't transform, it's very risky for the company, but getting ROI from transformation is also getting more and more tricky. So even though there may be a transformation office, there may be a chief transformation officer, you need the CFO to step up and bridge that gap, translate that board story, right, from investor perspective into the need for transformation. And that's where I see the role of CFO becoming very important. And they really need to step in and be an active part of transformation, not just delegate it to someone else. So I'll take a pause and see if you have any questions before I dive into how the CFO can actually play a critical role in transformations.
Yes. Thank you, Cam. I mean, for me, one thing that jumped out of my mind right away is how then for transformation does the CFO role differs from the role of the chief transformation officer or maybe the chief information officer. Just off the back of my mind, this is something that is coming out here.
Yeah, absolutely. So I'll start with the role of CIO, the Chief Information Officer. Many times what we see is that the board would come and say, well, we need to digitalize our operations, right? And we need to adopt AI and throw in all these buzzwords, upgrade our systems, be more nimble. And that's sometimes the risk is that you take that and give it to a CIO and say, hey, this is a technology project, go run with it. And that's where the risk is, right? So you need the CFO, the transformation officer, to come in that and say, hey, what does it mean for our business? What is the business strategy in future and how the business needs to change along with technology? So the role of CIO is very important because there is hardly any transformation without technology today. But the CIO needs to be very careful and ask for the help from CFO and other C-suite stakeholders. So that's why the roles are different as it relates to a transformation. We'll get into that more. As it relates to the chief transformation officer, many times companies do not have a transformation officer. In fact, for one of my clients, first, there was a lot of discussion over, I would say, 5-6 months around what does the business need to be in future and how it needs to transform. And we worked with the CFO and CEO to finally get to a point where they said they need to establish a transformation office and appoint a transformation officer. So sometimes there may not be a transformation officer. And once they are established, you still need the CFO to bridge the gap to the investors to make sure that the transformation story is communicated properly to the market and to the investors. And right resources are assigned to the transformation. Does that make sense?
Thank you. Thank you for elaborating on that one. So I'll let you carry on.
Absolutely. So there are three ways the CFO needs to engage themselves in a transformation. One is that they need to rebuild trust that transformation can be done successfully. And with 70%, and there are other stats where they say it is even more than 70%, transformations fail. So they need to step in and establish credibility in transformation. That's number one. And they're uniquely positioned to do that because they have the relationship with the board and the investors and the internal stakeholders. The second one is that they cannot delegate the transformation, right? They need to quarterback, and we'll talk about that, how they need to be in the middle of transformation throughout the journey. And the third one is that there is no transformation without people changing. And that is at all levels, right? Even the CFO has to change and learn new skills to be effective in transforming the company. And we'll touch on that as well. So let's dive one by one on first how a CFO can rebuild trust in a transformation. The first step, I think the CFOs are uniquely positioned to understand is what is the context of the transformation, right? There could be different flavors when you are trying to take major steps in a company. And I've listed out some here. One is, this could just be a situation where the company is already doing great, good. Their performance is good, share prices are good, but it's about being better, right? They want to maintain that competitive edge. And maybe supply chain is very important for this company, and they want to really optimize the supply chain because of potential disruptions in the future, right? Like COVID, and a lot of companies are rethinking their supply chain. Or they want to be more customer focused. So those are good to great. Or maybe they are on-premise software company and they want to move into cloud. So those are good to great that you really want to take advantage of the potential opportunities and you want to stay ahead of the curve. There are other situations where there could be a big disruption. A startup came and really created a new business model, like we have seen Netflix doing to Blockbuster. There could be disruptions like that. Could be M&A that is driving change. IPO, activist investors are playing more and more role. I've seen quite a bit of increase in investors, whether it's hedge funds or some other investors taking a stake in the company and taking on a few board seats and then starting to influence change in the company, right? So, and then I would also talk about turnaround. Those are situations where the company is doing really badly. If they don't do something drastic, they would run out of cash, let's say in 6 months or a year. And those are situations where just good to great doesn't work, right? They have to really take drastic steps. Understanding these contexts is very important in how you design the transformation. So understanding the context then leads into what are the expectations of the board, right? And I'll dive a little bit deeper here because I think it is important to understand these things to appreciate why the role of CFO is so important, right? One is that most public companies will track TSR, which is the total shareholder return. So if you, let's say, increase revenue by $100 million, that creates a bottom line impact of $20 million, and the price to earning ratio is 10, you created a value of $200 million, right? So what is the share market cap of the company? That's how you change that, and the dividends that you pay to the stakeholders. Understand what are the expectations around that from the market, from the investors, from the board. If it is a private company, or if it's a private equity company that bought a particular company and they have 4 to 5 years to transform, they would typically have a value creation plan. And sometimes it's called thesis, right? And they would have a plan on whether they want to cut cost, increase revenue, or buy a whole bunch of companies and roll up, as you see in healthcare quite a bit, maybe buy whole bunch of dental companies, combine them into one. So there could be roll-up strategy. So what are those strategy and how value is to be created if the CFO is very well positioned to understand that? And the reason that is important is that then they can be the voice, the storyteller to these external stakeholders about why a transformation is needed and what are the resources needed to run a transformation, right? Get the budget allocated for change. Then they also need to understand the internal perspective. Many a times I see that companies would say that we know we need to change, but our people are exhausted. They have gone through too many change. There have been failed attempts in the past, and we are not ready for another change. So understanding where you are in the organization in terms of being able to take on change and how you can set it up for success. That leads to then the CFO can build trust among the board members and investors and the people by working with the transformation officer and other C-suite leaders to set up the transformation for success. So I won't go through the stuff on the right side because we all are very informed about what are the success criteria for a transformation. But I just want you to appreciate that before a transformation has started, there's a lot of discussion that takes place with the board and the leadership, and the CFO needs to line up the right resources for transformation. And that's where they play a critical role. So I'll take a pause here and see if there are any questions.
Yeah, we have actually a question coming in, and that question is coming from Ferdinand. And Ferdinand is saying, I think organization company setup determines who should lead the transformation. So how will CFO get outside the box and understand the need for organization transformation?
The CFO, and we will get into this in a bit more, the CFO does not need to be the starting point to undertake a transformation. They just play a very important role to make the transformation happen and to make it successful, right? So it could come from marketing. It could come from the technology leaders. So the origination of the transformation, in my experience, can be anywhere, but it's really the importance is in bringing the CFO on board to set it up for success. The other comment I would make on that one is that many times I've seen that the CFO becomes originator as well because they hold the data. So, for example, one client wanted to fix their order to cash and lead to cash process end to end, right? Because they were introducing new products. They were not able to introduce new products timely because they couldn't bill for it, and the back office would not adapt. So the CFO took on a transformation more to fix the back office, but we found that to fix the back office, you have to fix the front office where there are a lot of root causes, right? So the CFO became an originator of the transformation, but we had to involve legal, marketing, IT, operations, all of them, and rally them around a common goal. So the CFO can be an originator of a transformation many times by virtue of what they see, having the holder of all the sort of downstream data and needs of the business.
Thank you, Cam. And I think maybe if I can maybe interpret the question, and of course, Ferdinand, you can pardon me if I don't get it right. But I'm thinking more getting outside of the box. I wonder if the box is more like the short term, thinking about the next quarter. And then outside of the box is actually having that longer term, so vision and basically for the CFO to be looking beyond maybe the shorter term and so on. So in that context, then if they look at the short term, then they may not getting outside of the box. So what could you offer the Cam?
That's setting the right business case. One of the success criteria is setting the right business case for the transformation and getting alignment with the senior leadership on what is the time horizon, right? What is the time horizon? How you will create benefit? Is it a self-funded where first 6 months you would create benefit and that would fund the transformation? Or do you need investment for 1.5 years and then you will see the results in 2 years, right? And thereon. So developing the right business case and understanding what are the KPIs to measure success. If you align on that, then you have the leadership behind you that, hey, we don't expect results in 6 months. This is a bigger transformation. We're going to change all of our ERP, or we are introducing completely new products that will take time to show results. So you have to set the right expectation and align on the KPIs to measure success, and thereby you can avoid that pitfall of being very short-term focused. One other thing I've seen is that involvement of the CHROs, right? So I see more and more early on socializing the need with the head of HR, because then they can be really the speakers of their people and make sure that very quick short-term, like cost-cutting kind of efforts are not taken at the cost of morale of people or long-term competitiveness of the company.
Thank you. And as we were mentioning CHRO, I saw the comment by Christian Delois, and Christian is also mentioning the people side. So they need to integrate from the outside change management in what people do. Let me go to the comment here shared by Kristen. And Kristen is saying CFOs are generally most comfortable when uncertainties and risk are low. So transformation ahead in the world of AI and climate change requires a big vision to reimagine the enterprise, which implies some comfort operating in high uncertainty. So in the model that you're providing here, does the CFO assume that visionary role as well, or is the CFO the check and balance partner, example, the operator? And then there is another visionary executives that is owning the vision of a big picture.
Yeah, so CFO in different roles. CFOs can provide vision based on what they know, but they do not need to own the vision. So I just want to be clear. CFO plays a very important role, but they don't need to be the visionary of the future, because there are a lot of other CEO included and other C-suite executives that need to bring that perspective.
And then just before we move on, of course, you talk about private equity. So could you maybe shed some light here? What can, because I know you had a lot of experience in that area, what can normal or traditional, if I can call it that way, CFOs learn from private equity CFOs, or vice versa? Is there any takeaway?
Absolutely. In private equity, what's different is that there is a defined time frame. So typically, a private equity company would invest in a business for, let's say, 5 years, okay? And they have a thesis on how they will increase the value of the company in that time frame. So the CFOs in private equity are hyper aware of that thesis, and the transformation is automatically linked to that, right? So you're not just transforming for the sake of transformation, but really seeing how does it help the thesis, and how does it help their people in setting up the company for next round, whether they want to go IPO or whatever that exit strategy might be. So I think, and I've worked with many Fortune 500 companies, probably 10% of Fortune 500 companies. Sometimes in bigger organizations, there is a lack of sense of urgency, and things are looked at optional. So I think if they could apply that perspective, or let me put even if it is artificial, let me put a time frame that if I had to transform the organization in the next 5 years, what would it be, and what steps might we take? And you're forcing yourself to a timeline, and that changes how you prioritize things. So I think a corporate CFO can really learn from putting a time box and then understanding how do we actually drive value creation that can help them be better in selling a transformation story.
Thank you. We'll let you move on.
Yeah, absolutely. And on the other side, Tairu, for the private equity CFOs, I think it is important to learn that there is a finite time, so you need to start acting earlier. I've seen sometimes the leadership team wait until third year in the exit life, in the life cycle of that 5 year, and then take drastic actions that are not optimal, right? So whether you start cutting cost abruptly, that impacts the morale of the people. So you really want to form your transformation journey early on, even during investing in the company or in the first year. That way you have the right time horizon to do things right. Right? So let's dive a little bit deeper, because I know some of the questions were, can CFO play the enterprise role and such. So hopefully this will also help shed some light on those discussions. So what I'm proposing here is that the CFO needs to be a quarterback. That doesn't mean they need to own everything, right? And the reason for that is that when you start thinking of a transformation, it has to start from the vision of the company, right? Which is the right arrow on the right side. It's like, what does the company need to do? Is the expansion going to come from getting into new new territories, new products, move from product to subscriptions, or digitalizing the business? What is the vision of the organization, and what is the strategy that the board and investors have? And I keep hammering on that, because I think that is a very good starting point, right? And then the CFO, who has the ability to translate that vision into the P&L. So what does the P&L and balance sheet look like 5 years from now? And creating that pro forma, they're the best positioned executives to do that. And then that's how they can then say that, look, we need to invest in plants or buy new machinery, or we need to hire more people of certain skills. So what are the capital expenditures and operational expenses? How it will impact the profit and loss? That means it will impact your EBITDA, which impacts the value of the company. So you need to paint this story accurately for the board to be convinced to make right investments. And there is a critical role for the CFO to play there. Okay? I think we are on the same page there. And then the CFO's second role is, once they have worked with the board, and these are not necessarily one after the other, but for the sake of presentation, I'm taking them one after the other. They are much more iterative. Then the CFO needs to tell that story. And if there is a transformation officer, great. If not, they may need to appoint one, or they may need to step in that role for some time. But regardless, they need to then work with the transformation executive or function to define the goals for transformation. What are the KPIs that need to be impacted? What is the return on investment expected from this transformation? What are the sensible goals? Shouldn't just be goals for the sake of goals. That's why there is an iteration on what are the right goals to set. That's where one of the questions is, should not be short term, right? If this is a transformation, if it is a turnaround, it needs to be short term, because the company will cease to exist, because they will run out of cash, let's say in 6 months. So that's a different kind of goal. But if it is a good to great, that's why I was saying that understanding the context is very important. If it is a good to great, then that's how the CFO needs to paint the story and say that, look, it will take 2 years, but our company will get into a new curve, a new S curve, so to say, and that will hold us competitive for next 10, 12, 20 years. Sensible goals. And on the other side, the transformation officer has an ask that, hey, to do all these things, I need a cross-functional team. So transformation officer needs to make the right asks to be successful. Just getting a budget and goals is not, and money is not enough. They need to have the right resources. So then the CFO needs to now engage, and again, these are not sequential, but engage the CHRO early on in the discussion on what does it mean for our people, and how do we transform our people in this process. And there is a role to play there because you want people to be excited about change. And one of the pitfalls I've seen, one of my clients had just delegated a transformation to the CIO, and they had 70 business units. They were doing things differently. And after tens of millions of dollars, they failed twice. And just to realize that this is about people. People need to change, and their processes need to change. 70 different ways of doing things. And even though the story was compelling, they wanted to double in size, but they did not involve the right stakeholders, right? So involving the key executives up front, motivating people around the transformation and getting them excited, the CHRO plays a huge role there. Okay? So the CFO needs to work with the CHRO. And on the contrary, the CHRO needs to ask all of the players, including the CFO, that we need to put humans at the core of this transformation. You shall not compromise with that for short-term gains, unless it's a turnaround or some drastic situation like that, right? Even then, the CHRO gets to put certain guidelines in practice. So it's always two ways, right? And I'll take a pause after covering other C-suite, such as CIO and COO. Then the CFO brings the team. Now you got a team, you got the budget, you got the KPIs, business case, and working with the CIO and other stakeholders who will actually make the transformation implementation happen, right? Working with the other stakeholders here. And aligning on what is the timeline, what is the budget, how the data will be impacted. And the ask from the CFO is that you've got to show value on the way, right? You don't want like a 3-year transformation. We are not in the era of a let's just give $100 million for 3 years and then we'll come back and show you value after 3 years, right? So these are much more agile transformations. You need to show value. And on the other side, the CIO need to make the right ask, or COO, on the right budgets for the right time frame and involving the stakeholders around data stewardship, right? Because if you're going to digitalize the organization, the data needs to be, they say that there's no AI without IA, which is there's no AI, artificial intelligence, without information architecture, right? So if your information, which comes from different stakeholders, is not taken care of, then only digitalization is not going to work.
This is really interesting here, and I have a question actually, Cam, because of course, as we moving or we are living in a time of always on transformation or perpetual transformations and so on. And as I look at the graph that you have, could you see a scenario where you take the CEO out of the center and maybe you put the chief transformation officer in that center, and then you move the CFO on the side? That in the context where the CFO would have a day-to-day job as well, meaning, of course, being a CFO is also, it's already a full-time job. So, and then with transformation becoming more like permanent in organization, is there a case where maybe another function, and it doesn't have to be the CTO, I'm just opening here just to see the thinking here. Do you see another role going back in that center, which is not the CFO? Or what other role could you see going in that center?
It's a very, very good question, Tyru. I can certainly see the transformation officer being in the middle. That's the role, right? Driving transformation. In my experience, we are not there yet, right? So I could see that. Certainly, there are situations where the CEO may need to step in, especially in a turnaround situation. They may need to become the center here and then make decisions very fast, given the situation, right? So I think part of it depends on the context of the transformation. But to answer your question, depending on the context, I could see like a Fortune 50 company, which aerospace and defense, they had a huge sort of merger going on. And then COVID hit, and they had to take some more aggressive actions. And a transformation officer was appointed. And I would say in that case, that person was in the middle. because they had to move fast, and the person was very aligned with the CEO and the board and appointed for that reason. So I think depending on the context, in even right away, the CTO could be sitting in the middle. And then I certainly hope and believe that as time progresses and the transformation officer role is more mature, they will sit in the middle.
Thank you. And then the second question that I have, because I like the premise that you have. Now, for CFOs moving in that center and going back to the question that Christine has, moving outside of the box. So what would the CFO, when they sit in that center, need to do in terms of their work with the ecosystem around them? So meaning with a CHRO, with a CTOs, and so on. Of course, they have the ones that are structural, but as a CFO, what needs to change when they get that center? Because again, I'm sharing with you here, Cam. I've been in organizations where year end or just before the year end, we go on that very nice retreat. I mean, we start envisioning what could be. Everybody is pumped up. We are ready to kind of conquer the world. And then we come back to the office, and sometimes the CFO tend to dash our hope, meaning that all of a sudden there is the resource factors that comes in, and no, you cannot do that, no, you cannot do this, and so on. And then you see the CFO becoming more like the check and balance that Christine is mentioning. It's not that it's bad, but then of course the way it is communicated, sometimes it comes everything comes back to cost. And then the big vision that was discussed during the retreat is maybe lost. So what would need to change then if the CFO goes in that role, especially you mentioned an organization where there is no CTOs?
I think it's a two-way responsibility, and it is as much on the CFO as other executives. So let me talk about that first, and then we'll get into the CFO, what the CFO needs to do. And there are certain suggestions I have on that. So first of all, when I'm a CHRO or CIO, I think it is very important to engage the CFO early on in the transformation journey, right? And align with them on the business case. It's very obvious, but it doesn't happen many times. What is the timeline to deliver the business case? What are the KPIs to measure value? Some of the KPIs could be leading indicators that they may not show the P&L impact yet. The P&L impact might come 2 years later or 1.5 years later. But you are showing the leading indicators that, hey, we have, again, like on-premise software to cloud-based. So we have moved 10% of our customers to subscription, but maybe they didn't move fully to subscription. That's a starting point. So what are your theses and how would you measure success that are indicators that your P&L impact is coming, right? So I would align on those KPIs early on and agree on the timeline and bring the CFO along in that journey. That way they are more they know, better they can support. They will support as long as they can articulate the value back to the investors, right? So if they can go and say that this is why we need to stay the course and we are making a CapEx investment, or if there is an operational investment that's impacting the P&L right away, they can tell that story to the board and bind the support for the executives. So I think it is as much on the CIO or the CHRO to help the CFO understand the story. That way they can support them.
Excellent.
So that's only the first part of the answer. Yeah. Excellent. Go ahead, sorry.
No, we'll let you move on. Yeah. Please keep going.
And then I would probably looking at one other question that comes up, and I'll get to the second part of the answer in the next slide here. Another question comes up is the CFO is already busy. They don't have time, right? So that's where the CFO needs to change, bring about change in their finance function and themselves. And we'll talk about that in the next page here. So one thing I wanted to highlight here is that you will see that each of these roles work iteratively around, right? The CIO has a education to do for the board and leadership around how technology is impacting the company, right? So it's all iterative. It's not sort of one sequential steps. So now let's talk about what the CFO needs to do differently. That was the second part of the previous question. So the role of CFO, if you think about the past, what it was more of controllership, right? Let me bookkeeping, recording all the transactions, accuracy, right? That was the focus, right? Controllership, making sure that your AR is up to date, you're collecting money, you're paying your vendors, your account payables are on, up to date. So those were, and then internal risk management. Those were the work of the CFO in the past. But today the CFO is different. Today the CFO is a lot more strategic, or they have to be more strategic. There is increasing need for a P&A function, right? Scenario planning. What if recession happens? What if interest rates keep going up? What will happen next year, right? So they have to do scenario planning and adopting automation. So a lot of CFOs have stepped up, and to get from left to right, you'll see that many organizations now have a function called Chief Accounting Officer, right? The reason is that a lot of the controllership functions now need to be taken care of by the accounting officer, so that CFO can be more of a business partner and free up capacity. They're also hiring VP of FP&A so that they can create those business scenarios to help decision making. But the CFO of future has to be a lot more, and therefore they need to build the right teams. In future, we see the CFO to be more business predictor. What might happen, right? What extrapolating, whether it is the economic trends or weather data or whatever those might be, but really using data to predict the business in the future. And they need to focus, allocate the resources towards the future, to build the future versus what the business is today. So they need to be very careful in allocating budget that will build the future of the company. And they need to be a key player in enterprise transformation. So how do they need to change? First of all, they need to build empathy, right? So CFOs are typically very numbers driven, and they would look at the cost P&L and potentially can deprioritize initiatives that are very critical for future, and they need to develop that empathy towards people and build that transformational leadership where they understand the vision outside of finance. So they really need to play a role where they're becoming more of a transformational leader. They understand the implications on marketing, on how they want to drive the business, sales, and other functions, right? So that's why the CFO has to reskill themselves. You will see more and more CFOs not from accounting background, or at least a lot more than accounting background, when they're appointed as CFOs in future. So that's the second part, where CFO needs to consciously change themselves and evolve. Otherwise, it's more of a CAO function. And even the CEOs are stepping up nowadays to be more transformational. So I'll take a pause here and see if there are any questions or comments.
Just to drive home that message, because we have Joe, and Joe has a comment where Joe was sharing that the CFO's day job is to be doctor number. And going back maybe to your comment on the accounting side, maybe, someone maybe more positioned to deal with the numbers. And following Joe's comment, this is often in conflict with a transformational culture. You have to be an entrepreneurial CFO with a growth mindset in order to be a credible quarterback. So really, what does this bring to mind here? Meaning, of course, to harness that conflicting element between the numbers, as you were mentioning it, and also looking at what is possible, looking at thriving in a rather uncertain world. What do you think?
That's the message I have here, right? So I'm totally aligned that the CFO has to evolve beyond a finance and accounting person, and to be a lot more transformational leader, which means being a growth mindset leader, understanding the vision of the company, being able to develop empathy towards change management, and the need for people to transform, engage CHRO in that process. So they need to be a lot more technology savvy instead of just delegating to the CIO any work related to technology, right? So they need to, there's big ask, and how one developed to be that is they have to delegate some of the traditional controllership work to automation or other roles in the organization so that they can step up. The problem we have here is that, at least for now, I don't see another player who can step in that role. The CFO has the credibility, as we started this discussion, with the board to translate the transformation into P&L and valuation of the company. And that's the reality, that to get resources for the transformation, that needs to happen. And CFO is uniquely positioned to that. So the choice we have is to evolve that role. I think it's very important for the CFOs to, and the boards need to appoint the right CFOs. If the current CFO, training them to have this mindset is very important. And we'll see that. We'll see that more and more CFOs will need to be more of transformational leaders versus what it was in the past.
Thank you. Thank you. And of course, we'll move now to the Q&A part here. Let me just say, as we were thinking about this session, and we know, of course, many people joining here are not CFOs. And the question could be, what would it mean for me? I'm not a CFO, so maybe this is not a case for me to be concerned of. But we felt, actually, as we're hearing the point that Cam is making, it could be a conversation point as well, because most organizations have a CFO. So as you're hearing the point here, it could be a point to discuss with CFO, your CFO, and opportunities for the CFO to become more entrepreneurial, as Joe was mentioning, or more transformational and looking beyond the numbers. Let's go to a comment that Christian has. And he said, this requires a big change of mindset for CFOs. Why is it needed in your opinion? Isn't going down that road making transformation even more difficult? There are enough obstacles already. I don't agree. Of course, it is quite. I'm reading it because again, it is quite a challenge here. So I just want to hear you, and I hear you earlier actually mentioning that there are cases where there is no one to lead the transformation. So, yeah, hearing to you, what do you think? Thank you, Christian.
Yeah, I mean, I think the question assumes that the transformation is funded. If you look, if the board has given you $100 million, go run the transformation, great. You can go run it. But I think that there is a reality here that we need to understand, that to get the transformation funded and retain the funding and support, CFO can jump in that role of being the storyteller about the transformation to the external stakeholders, right? If you don't do that, yeah, I mean, you can do some minor changes, but to bring about big changes in the organization, you need to rally those stakeholders. And you can, if you leverage the help of CFO, you will be in a much better situation. And then particularly avoid situations where we go to an offsite, as you were saying, Tahiru, everybody gets excited. And 6 months later, it's like, okay, deprioritize this, deprioritize that because we don't have money. Because you didn't buy into the right stakeholders or get the buy-in of the right stakeholders. Get the CFO on your side, and you'll be able to affect more change in the organization. It takes effort, but it's worth it.
Excellent. And of course, we have an earlier question from Kevin, and he's asking, what is your experience with private equity organizations having a transformation office or EPMO that builds capabilities and a transformation operating model within the portfolio companies as part of the capability building to realize the value objective as a PE? I don't seem to find PEs bringing this function as focus part of their own capability. So do you basically either outsourcing it, like having a PMO with private equities?
Yeah, private equities are, they operate in slightly different ways, right? So I certainly see that if I had to see the role of transformation office and chief transformation officers, I'd say the corporate has been ahead of the curve in adopting that. But for private equity, I think the opportunity is also on the sponsor side. So you have this PE firm that might have invested in 30 companies. So if it is impractical to develop a transformation office in each of the 30 companies, there could potentially be a role at the private equity level, the parent company level, where they can invest in developing those capabilities and then advise as internal consultants to the portfolio companies. But I see a lot of times the PE companies itself can be mid-sized, maybe only $500 million in revenue, and they may not, or even less, right? So they may not be able to appoint a chief transformation officer, but there are other ways to go about it, which is through the PE sponsor. Yeah.
You see how fast 60 minutes goes. So we are just about at the time. And I saw, of course, some Kevin sharing a resource and so on. So thank you. I wouldn't take it long. Maybe asking you, if you have any closing remark, or if you have a call to action, what would it be?
Well, I would just say that don't think of bringing. Cam is now suggesting bringing in other stakeholders and make it more complex. I would think about this as understanding each other's perspective is very important, right? So hopefully from this presentation, if you took away how the CFO needs to tell the story to the investors, I think my presentation was successful, because then you will articulate the need for transformation or the progress of the transformation in a way that relates to that story. That way you are enabling the CFO to be on your side, right? So this is really understanding each other. And similarly, if you're a CFO, hopefully you understand that it's very important to engage the other stakeholders in building your story and playing that role to transform yourself and help transform your company. So the CFO can take certain steps to create more value for the company, and so is all the other functions. So hopefully you have taken away some of those. And that would be my closing remark, to really allow for that dialogue and help each other in this process to ultimately help your stakeholders.
It has been a delight here, because of course when people think, there could be some tension here. So what I'm hearing, it's not necessarily replacing, it's really reframing and seeing roles that CFOs could play, moving away from the tactical element, but to the more strategic, and harnessing and building in the entrepreneurial spirit and the transformational element there, and having the buy-in at the beginning as well. And as you're mentioning, the emerging role also, depending on context, there could be a CTO also stepping in some of these transformational changes as well. And I saw someone also listing the chief strategy officer. At the end of the day, the end in mind remain the same. We want organization to be more successful in transformations. And there are some contexts that are already made up, which we have to operate with. And in this fabric, or in this setup, we need to find ways of moving out of the box and actually delivering value for our organization. So thank you so much, Cam, for bringing that to us. And all who joined today, really thank you for your time, and thank you for the questions. Thank you for the engagement, and have a great one.
Thank you.